The stock market surged higher on Tuesday, reversing some of the losses that we saw on Monday. A pretty bad day on Monday, but you can see here Dow Jones Industrial Average up 2.0% early in trading. The S&P 500 is up 1.9%. This is just before 11 a.m. on Wall Street. And then NASDAQ Composite is up 2.2%. So pretty good numbers to start the day. The interesting thing here is that the data and some of the information that we're getting from both companies and some survey reports is actually not all that good. So I want to dig through some of that today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. One thing that the market is overlooking today that I think is really interesting is the IMF, or the International Monetary Fund, slashing U.S. GDP growth estimates from 2.7% to 1.8%. Now, that's still a positive number, so that means that that wouldn't indicate a recession, maybe a recession throughout part of the year, but this is really driven by trade tensions. So this is what the market has been focused on. One of the things I want to point out is that all of the data that we're going to be seeing, at least the hard data, is going to be backwards looking. So it's going to be from the first quarter primarily, the month or the quarter ending in March. April 2nd was when all of this tariff announcement started. And that's really what threw the market into turmoil. That's when we started to see the dollar drop, stocks started falling, bond yields started to rise, and we're not really seeing the hard impact of what those costs would be either. So we're starting to look at some of these indicators. We're going to try to tease out what companies are saying, what their prices are looking like, what their margins are going to look like in the future. But a lot of this is sort of anecdotal data yet. It's soft data. It's not quite hard data. But let's start with the first thing that we saw today, and that is a survey of business activity. This comes from the Richmond Federal Reserve. Before going through the numbers, let's explain exactly what this is. The technical notes. Number one, each index equals the percentage of responding firms reporting an increase minus the percentage of firms reporting a decrease. So manufacturing activity, who's seeing an increase and who's seeing a decrease? So you can see here that manufacturing activity has been slowing, and that took another turn for the worst over the past month. The dark blue line is a 3-month average. So light blue is going to be just the 1-month numbers, and that was -13 was the reading. That's down from -4 in March. Employment also moved a little bit lower, not quite as sharp. Wages stayed pretty stagnant. And look at this price number. Price trends look like they are moving higher and sharply higher for each one of these companies. And again, this is kind of the first level of soft data that we're going to get. This isn't going to flow through to earnings or revenue until we start to get second quarter numbers. This table shows the business activity indexes. So this kind of breaks this down into multiple pieces. A couple of things to note here. Shipments -17 in April. That's way worse than -7 in March and in February of 2025. So just 2 months ago, that reading was positive at 12. Local business conditions. That's going to be another one because that's what's probably going to be hit first by tariffs or any sort of cutback in spending. The big companies, they can handle any sort of these changes. They've likely got bigger and better balance sheets than a lot of local businesses who typically don't have the same kind of leeway. So you can see that that reading has gone from -5 to -21. And the other one that I think is really key, backlog of orders. Are companies ordering things? This is going to be months or potentially years in the future. That's when we're going to start to see this hard data. But that is now -24 from -6 and -1 in the past 2 months. So like I said, that's some of that soft data that we're starting to get, and it's not looking very good. But we are getting some hard data. And again, we're going to have to tease out exactly what some of these numbers mean. The two big earnings reports before the market opened today were from 3M and Verizon. I think that gives us a pretty good indication of what the economy is going to look like.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
Let's look at 3M's first. Now, 3M, not typically a high growth company, but they are going to be sensitive to basically everything that's going on in the economy. So they're going to see if energy is down, if manufacturing demand is down, if consumers are spending less. So they're going to be a pretty good barometer and give us pretty good indications. And look at the warnings that they have in the bottom left of this slide. GDP and inflation are softening, or the inflation price index. Auto builds are weaker, especially in the US and Europe, and the US consumer is being cautious. So that's the macro backdrop. None of that is positive. All of that is negative. I'll get to their guidance here in just a second, but you can see that their growth or their organic growth was just 1.5%. Operating margins are improving, so that's generally a positive for their earnings. But this is not driven by top line growth. You go to sales by group and you see that safety and industrial, these are some bigger, this is going to be less discretionary spending, but that was up 2.5% in the quarter. Look on the far right, consumers only up 0.3%. Soft consumer spending, particularly on command and packaging and expression. The consumer accounts for about 70% of the demand in the US economy. So if the consumer is weakening, the entire economy is going to get weaker, especially when we see some of these increases in tariffs and costs that are going to be borne by the companies that are importing those goods. So overall, this is a pretty negative report. And finally, here we get to what is guidance going to look like? This is something to look at for all companies across the board in this quarter, particularly. Do they pull guidance? Do they give sort of these caveats here? On the right, you see the tariff impact sensitivity, 20 cents to 40 cents per share in earnings is their sensitivity. And then they have a contingency for the macro. That would mean, hey, if we go into a recession, that's going to have a negative impact on our earnings. There is a positive. General and administrative expenses expected to be a little bit lower, so they get a little bit more operating leverage. But there's going to be potentially 20 to 40 cents in earnings of headwinds. And this is for a company that has a very large manufacturing presence in the US, exports a lot of goods from the US, yes, also imports a lot of goods, but also has about 70% of their sales outside of the US. So if 3M is going to have this much of an impact from tariffs, expect that a lot of companies are going to be much, much higher than that, particularly in the consumer segment. The final thing to go through is some of Verizon's numbers. So Verizon is going to be a subscription service. This is not going to be impacted by tariffs. Going to be likely one of the last things that people are going to cancel if the consumer is starting to pull back. But we are starting to see some weakness. You can see that here in the consumer segment in the top center, lost 356,000 post-paid customers in the quarter. The question here is, are customers already starting to move to lower price plans from some of their competitors? Businesses also not quite the growth numbers that you saw just a quarter ago. Broadband net adds also down a little bit. So these weren't terrible results from Verizon. The company's free cash flow is increasing. They're reducing their debt a little bit, but there is starting to be some concerns about how much demand is there for wireless services. And is that starting to soften? Is that going to be one of those broad indicators that the economy overall is softening? Something to think about, especially when you have some of that survey data that I talked about earlier. So that's interesting in the context of the market surging over 2% today. We'll see if that lasts. I have questions about that. As an investor, I'm definitely looking for companies that are trading for a really nice value because I do see a lot of headwinds ahead, especially if these tariffs stick around, which it looks like for now they're going to. But let me know what your thoughts are today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.